Good afternoon, good evening, or good morning, wherever you may be. Coming to you from Honolulu, right after lunch here, and after a good market move today. I want to talk about the stock market. I want to talk about being over 27,000 on the Dow Jones average for the first time in history. I remember getting into this business when the Dow Jones was about 400. And now we're talking 27,000. I can't believe, but there were a lot of mountains and troughs in between. So what is making the market move? Don't know. There are many factors. There's a lot of cash out there in the hands of doubters who believe the country's all over and we're going socialistic and Trump is going to implode and then we're going to end up in a severe recession. Asset allocation and pension plans, endowments have favored bonds for many, many years. Could it possibly be that the bond market is now going to have a severe correction, in which case assets could be shifted by those in charge towards stock? There are just a whole bunch of reasons why this market could go up, as well as a bunch of reasons as to why the market could go down. But the technical side of the stock market, that school of thought that attempts to look at the market as an animal and tries to determine its behavior and where it's apt to go, is alive and well, because the market overcame a big technical obstacle last week, and yesterday and today's follow-through cements that. We put that bad looking chart pattern behind us. So the technical aspect of the market is all good. For a year and a half, we bounced around the 26,500 level and was unable to get through to a new high. And we had some serious corrections, 20% type, like just last December, 7 months ago, and serious advances out of those doldrums. So it's been a sideways ride if you just don't look at the ups and downs for a year and a half. And all of a sudden we have broken through this zone. What does it mean technically? It means that this year and a half sideways trough now becomes possibly a platform to launch a bigger move into the 30,000s. That's just what a chart says. I can't tell you what is going on in the world. I mean, Iran still looms. The question of China coming to the table to negotiate a good trade deal with the United States is still, I think, remotely possible. But the market likes what it sees, and it's seeing something. I think it's all of the above. A lot of cash, a lot of minds that have been focusing on the bad rhetoric brought on by the media, socialistic views just being pounded and put in front of people on a daily basis, and just maybe people are sick of that stuff and they want to go back to good old-fashioned USA. And they get a chance to vote that way in about 14 months, and perhaps the market is looking at that. I don't know, but it's a lot better, and to us, a lot more positive environment. The market over the last year, while going sideways, was full of cross currents. Any company that did business in or with China was in jeopardy in terms of their earnings, in terms of their business profitability. We have had Donald Trump suggest some kind of price control on pharmaceuticals, and the drug stocks were down sharply. And of course, the specter of debt and what it might mean to banks and financial institutions has scared people into bringing these stocks down to very, very reasonable, cheap, in fact, prices. So we've got a lot of opportunity in the marketplace, and for us, a key variant is going to be the dollar and the strength or weakness of the dollar, and that will tell us whether some of these undervalued sectors are going to come alive or not. It's fun. But for once, we've got a better technical picture, and we are one click more positive than we have been. Thank you.